Good morning, everybody. It is Cynical Wednesday, April 10th, 2024. My name is Matt, and I don't know, I just read the news this morning, and just about every article I read this morning, I was like, that doesn't sound right, or that's a little overly complicated, or I don't know. We'll get into it. You tell me what you think of my opinions about these things, and, well, you can always email me at matt@dailycryptonews.net. If you're looking for Sarah, it's sarah@dailycryptonews.net. Pop over to our Substack. We post our summaries of our podcast there, sometimes some commentary. You can leave comments there, and if you want to just talk to us and chat about our daily news, feel free to DM us. Anyway, let's get into said daily news. So there's a Hong Kong-based stablecoin issuer called First Digital Trust, and they said that they're expanding their $3 billion pegged FDUSD stablecoin to the Sway blockchain after being available on the ETH and the BNB chain. The expansion is part of the First Digital's effort to boost its FDUSD usage among decentralized finance users. In only 1 year, they have reached a $3.3 billion market cap. FDUSD's trading volume surpassed $10 billion in the past 24 hours, with more than 90% of that coming from Bitcoin and Ethereum and USDT trading pairs on Binance. See, the token has been largely benefiting from a Binance trading promotion, and this was following the shutdown of Paxos-issued BUSD stablecoin because it was ordered by New York State regulators, which I think is absolutely interesting. So what they do is they say, hey, no cash into Binance US, and we're not going to allow you to trade with BUSD anymore. So what's the next option for them? Well, other stablecoins come out of the woodworks, and people start using that. And is it actually better than BUSD? And so you have these second, third, and fourth order consequences to a decision you made about Binance US in the United States. I think that's super interesting. You really have to figure out, if you're going to say, I'm going to stop you from using this, you really have to figure out the third, fourth, and fifth order effects of your consequences. And we see this all the time in the United States when it's banning substances, banning practices, or regulating certain things. This gray or black market emerges. And this is basically what's happened here. This other market is emerging. And is it actually better than the market that we had before? I don't know. Well, I was looking on the website because I'm wondering about FDUSD. I've never heard of it before. And of course, it's a stable coin. But reading their white paper, they said it's backed by fiat currency, i.e. the US dollar. Well, this is a US dollar stable coin, and I cannot find how it's backed. They say it's 1-to-1 with dollars, fiat currency, or dollar equivalents. But I don't know what the dollar equivalents are. Are they treasury notes? Is it real estate? Is it somebody's coin collection? I really don't even know. And I don't like the fact that their white paper says, i.e. the US dollar, because that's not saying the US dollar. It's saying, for example, the US dollar. We have a $3.3 billion market cap stablecoin, and I'm skeptical. That is cynicism number one. The film industry is one of the most centralized industries in the world. Films often languish in development hell or are allocated millions of dollars in funding based on the whims of a small number of executives. There are basically 6 major studios in Hollywood, if you will, 3 of which are the giants, the behemoths, and they make all of the decisions. That means that for filmmakers, there's really no clear route of how to secure funding for projects, and that's where this film.io comes in. See, they want to create a path for filmmakers to take advantage of this ecosystem for creators, of fans, of investors, and collapse the distance between them, according to film.io. And so they're really focused on greenlighting projects and to make up an environment where people aren't trying to rip each other off. So what you can do is you can pitch a film or a TV project on film.io. Each fan holder, because fan is a token of film.io, can endorse by staking their tokens on a certain project. The more staked tokens on a project, the faster it can be greenlit, and then it will unlock features including funding tools. And here's my cynical take on this. I think this is really cool, but it's overly complicated. If somebody really wanted to fund films, you didn't have to do it with DeFi or a DAO or staking. It's just overly complicated. Make a niched out GoFundMe and then have filmmakers make pitches. People upvote the ones that they want to see, and then they are donating money to them. There's different donation tiers. Maybe you get executive producer status if you donate a lot of money, and then make sure you hold them to making the film. Again, I don't know why you have all this. The only thing I can think of is because there are going to be bots in different ways to game the system. You have all your friends and family or people who want to work on this film upvote and greenlight a certain project, and then it's just the tokens is that barrier to not have fraud or not have bots on the system. Okay, I kind of get that. However, let's just say you're sitting over here with, $30,000 you want to part with, and you want to fund like some kind of small indie film. Why isn't there just a marketplace where people say, hey, does anybody want to fund my film? Here's a trailer. Here's a concept. Let's hop on the phone. Let's talk. And I think that would be a lot better barrier to entry than, say, a crypto DeFi DAO. My opinion. What do you think? I've been saying this for years, though. DeFi and DAOs and these kind of projects are basically just more extra steps that take away from the actual experience of doing the thing that you want them to do. Cynicism, number 2. The Solana community has approved a governance proposal to activate timely vote credits, or TVC. This is a mechanism that will mitigate the delays of the validator voting system and ultimately lead to lower congestion on the network and faster transaction speed. The proposal was passed with 98.4% of the votes in favor. So why are they passing this? Well, I guess there's a loophole. There's a loophole that Solana validators have exploited in order to earn credits by failing to participate in consensus. Until now, validators have been maximizing their earnings by delaying voting just as long enough to see which fork is going to win. So I guess when they make a proposal, they're going to hard fork Solana, and they would need the validators to confirm. Well, if the validators are using the tokens to vote, they're not using those tokens to stake. So they're going to sit back to see which one earns, so they don't have to deal with this. So they're going to sit back and see which one wins, so they don't have to deal with it. And when they see, oh wow, everybody's voting for this one over here, I'm just going to do that and let's get this done so I can start earning more money, right? And so it looks like because everybody has the same game that they're playing, nothing really gets done. Nothing gets validated, this fork doesn't happen, and it congests the network, and it seems like a mess. And so the delay in voting has led to slower confirmations and finalization of blocks on the network, which impacts the speed of Solana in general. The TVC feature will instead award votes in a variable number of credits, with faster votes receiving more credits than slower votes. So if you get in there quick, you have more credits and more weight to your vote, apparently. This way, validators will be incentivized to vote quicker, making it counterproductive to wait and survey folks before voting. P.S. Because of the congestion, Dogwifhat is leading Solana meme coin losses. Oh no, it's still at like $3.50, which is absolutely astonishing. Grayscale's CEO, Michael Cynicism, claimed that the Bitcoin outflows from Bitcoin Grayscale Trust is approaching an equilibrium, and arguing that the outflows from the funds were anticipated. We knew this coming into this and anticipated that there'd be all kinds of outflows. GBTC is the collateral that was inside some of the bankrupt estates around the whole ecosystem. Those liquidations have been forced. And maybe I'm late to this realization. Maybe I'm just late to the game. But remember, they have some of the highest fees, 1.5% fees. And since these liquidations are forced, maybe they kept them high so they can collect the fees from these liquidations. Am I just late to the game with this? And 1.5% fees is like the highest you can go to get people actually buying as well. So there's this like equilibrium, if you will, of forced outflows and buying into their trust/ETF. So maybe after all this is all done, all these forced liquidations are done, and they do get to equilibrium or below, then their fees will go down. Is that how it works? Let me know. Matt@dailycryptonews.net. And finally, I love this headline. Cynicism, number 3. Bitcoin breakout halts as U.S. inflation data looms. Look, you guys, inflation data just came out a little bit ago, probably less than an hour ago. Oh, by the way, the CPI rose 0.4% over the previous month, and it's 3.5% over the last year. Apparently, this is coming in a little hotter than they anticipated. They were expecting a 0.3% monthly increase and a 3.4% annual increase, but it's 3.5% and a 0.4%. Not as hot as everybody's saying, but apparently this is hot, according to the headlines. So this is my cynicism. This is a stupid headline. Bitcoin's breakout doesn't halt because of inflation data. Bitcoin's breakout is halting because of what I told you. It's going to go sideways until the halving. We have around, 6 to 10 days until the halving, and then we're going to get a pullback. These are my predictions. Please let me know. Matt@dailycryptonews.net if you agree or disagree. But these headlines piss me off. Anyway, let's see what those crypto prices are. Maybe I'll be wrong.
Here comes the money.
Here we go. Money talk.
And the time is 9:25 a.m. Eastern Daylight Savings Time. And fear greed's at 75 greedy. And I can see why it went down, because it's brutal out there. It's absolutely brutal. Bitcoin's at $67,607, down 4% in 24 hours, 2% in an hour. Look, please just turn off CoinMarketCap for the next 2 to 3 weeks. I'm telling you, Ethereum is at $3,429, down 5% in 24. This is not financial advice, obviously. Tether's number 3. Binance is at 576, down 1%. And Solana is at 164, down 6.2%. But Matt, you told me to BTFD. I know it wasn't financial advice, but you said BTFD at 180. Yes, BTFD. Buy the dip. And this is another one. Here's the dip. Keep buying. Dollar cost average. Not financial advice. Right off the top 10, we have XRP, USDC, Dogecoin's down 6%, at 18.2. Toncoin is up 1%, still up 32% on the week, and Cardano's number 10. The total market cap is at 2.53 trillion, down 4.5%. We have a Bitcoin dominance of 52.6 and ETH dominance of 16.2. That was our show today, but please keep this in perspective. We're having 5% dips, and Bitcoin is still at $67,500. Ethereum's down 5%, 5.5%. It's at $3,400. In the top 10, we have Cardano down, 8.5%. It's still at 56.4 cents. We still have major gains across the market. Some of them are going back to pre-ETF levels. For example, Polygon/Matic is down 8%. It's at 86 cents. Pre-ETF, it was around 78 cents. So look, there's a lot of things happening here, but even though we're having major pullbacks right now, we're still really doing well. And so please don't get discouraged. And happy HODL, everyone.